There's a persistent myth in financial news, especially when the market's climbing, that stocks are somehow defying gravity and are due for a painful fall. Everyone sees the headlines, the ones that talk about the market heading back to earth. It's a great story, but it's a terrible metaphor for how markets actually work. Your investments aren't some heavy object being kept aloft by strenuous effort. They're not a hot air balloon that must eventually descend. They are, in a far less poetic but more accurate sense, perpetual claim tickets on companies' future earnings and dividends. The value of the stock isn't fighting a force of nature. It's simply a reflection of the market's collective judgment on a company's future profitability. In other words, when stocks hit new highs, it's not a sign of the system being broken. It's a sign that it's working as expected. Think about it. Every day, thousands of businesses are working to innovate, grow, and generate a profit. Their success, over time, is what drives their market value higher. To put it bluntly, it would be difficult to imagine a scenario where investors freely put money into stocks with the expectation of losing money. The idea that you should avoid buying at market highs is a powerful emotional signal, but the data tells a different story. In fact, reaching new record highs is a normal and expected outcome if a stock has positive expected returns. Over the 94-year period ending in 2020, the S&P 500 index produced a new high in more than 30% of those monthly observations. A study from Dimensional Fund Advisor shows that purchasing shares at all-time records has, on average, generated similar returns over subsequent 1, 3, and 5-year periods to those of a strategy that purchased stocks following a sharp decline. The numbers don't show a clear advantage of waiting for a drop. All they show is that staying invested pays off over time. Your biggest opponent isn't the market, it's your own mind. Our human brains are conditioned to think after a rise, a fall must follow, tempting us to fiddle with our portfolios. But the data shows these signals only exist in our imagination, and trying to act on them can hurt your long-term results. That's where I come in. My job isn't to predict the market. It's to help you navigate your emotions and stick to the plan we've built together. It's about ensuring your portfolio is structured to handle markets' ups and downs so you can focus on what really matters: your business, your family, and your legacy. We're not fighting the laws of physics here. We're embracing the power of a disciplined strategy. If you're a business owner or successful professional, you've already built your wealth on a foundation of discipline and a long-term vision. Let's make sure your financial plan is built with the same strategy.